Simple and repeatable is exactly what your trading system should reflect. Now in this video, I'm going to show you one of the simplest trading strategies that you will ever come across. I've used this strategy for a very long time, and I'm essentially combining traditional technical analysis with ICT. Now, what I'm about to show you works on any time frame, and it works in most markets. Now, me personally, I prefer to trade this on a lower time frame as a scalping strategy. So the first step of this strategy is essentially going to be identifying trend lines, okay? So again, we want to identify a trend line. Now, if you're confused as to what a trend line is, that right there is an actual trend line. Now, a lot of you are wondering, especially ICT traders, why are we using trend lines? Well, the reason why we're using trend lines is quite simple. We are using trend lines to identify when the market is going to reach for trend line liquidity. And that right there is exactly how I bridge the gap between traditional technical analysis and ICT. A lot of ICT traders will sit at home and say, well, trend lines is never something that I would trade. And then 2 minutes later, they will tell me all about trend line liquidity and how they trade towards it. So without knowing, a lot of you are already trading trend lines. Now, the reason why I like to include them is because it gives me a sign as to when the market will reach for the trendline liquidity. Now, trendline liquidity is quite simple. The vast majority of retail traders are taught to short trend lines like this, so they will short every single retest of this trend line. Now, that right there is exactly why we can predict where a lot of stop losses are resting within the market. The traders who shorted the trendline retest here place their stops here. The traders who shorted from here place their stops here. The traders who shorted from here place their stops here. And so that right there is essentially what trendline liquidity means. There are so many stop losses placed at each and every one of these highs because that is exactly what the vast majority of retail traders are taught. Now, when the market finally decides to break this trend line, even though it's very traditional technical analysis, that right there is our sign that yes, the market is finally ready to go ahead and accumulate all those trend line stop losses that we just talked about. Now, what you would normally do here when you are a retail trader or just somebody who trades traditional technical analysis is wait for the trend line to retest the trend line and then go long from down here. So you're essentially doing the exact same thing as all these people, only you are trading it in the opposite direction. I am a trader who uses the Fibonacci extension tool on a daily basis. It is one of the biggest parts of my technical analysis. Now, the zone that we're going to be using in this video is going to be the 61.8. So that is a well-known Fibonacci level because it is the first zone of the optimal trade entry. Now, what's so cool about this Fibonacci extension tool is the accuracy that it has when it comes to predicting pullbacks within uptrending or downtrending markets. Now, with this whole strategy, we are essentially expecting this trendline break to be a shift in sentiment. So again, the market was previously super bearish here. Now, when it then reaches and breaks this trend line, we are expecting that bullish sentiment to now shift into bearish sentiment. And that is exactly why this Fibonacci level is so useful. So again, this right here is all we're looking for. And no, you don't need a bias. Now, in case you're wondering where I'm placing all these trades, I am using toobit. Toobit is just a great exchange. They have a great support team. Their interface is simple and easy to use. They also offer a wide variety of bonuses for all their traders. And speaking of bonuses, right now I can offer you 50 USDT for free by simply signing up with the link below. So if you're looking to change your exchange or you don't have one yet, well, then I would highly recommend that you check out toobit. A lot of people are way too worried about a bias and they mess up their entire technical analysis because they're so focused on trading towards the correct bias. Now, again, unless you're going for very, very long trades, well, then a bias doesn't matter as much as you think. Again, step number 1 is to identify trend lines. Step number 2 is to wait for the trend line break. Number 3 is to wait for a retracement into the 61.8% Fibonacci zone. So that right there is the 3-step process that we go through every single time that we want to trade this strategy. Now, again, this right here is a drawn out example by me. So let's jump right into the first example. Here we are looking at Bitcoin and more specifically a 5-minute time frame because as I said, I like trading this on an intraday time frame as a scalping strategy. Right here we can clearly see that the market is already in sort of an uptrending market. So we have established a trend, but not that it's necessary. Again, we've established the bullish trend and now what we're waiting for is a break of this trend line that we're seeing right here. Currently, we've had 1, 2, 3, and 4 retests of this very trend line. So when price finally decides to break through this trend line, then I'm going to anticipate that the sentiment is shifting towards bullish sentiment again. So let's play it out and wait for a break of this trend line. Now, right here, we can see a massive break of the trend line. And what we're going to do is immediately pull out our Fibonacci extension tool. And then we are going to long it from the 61.8 which means that we would have already been filled. So again, our entry goes to the 61.8 and our stop loss goes to the low and our take profit goes to the high or the end of that trend line. So let's play it out and see exactly what ends up happening. And as you can see, it ended up playing out picture perfect. So again, we use this trend line not because we're trend line traders or because we believe in the trend line analogy. No, we use this trend line to figure out exactly when the market was going to reach for this trend line liquidity that we just talked about. So again, just a picture perfect example of this strategy playing out. Now, of course, if you can combine it with the overall trend of the market, that is always going to be the best option. All I'm saying is, it is not necessary for you to sit there and spend hours of your day trying to figure out where price is headed next. So let's jump right into the second example, which again is going to be on a 5-minute time frame on Bitcoin. So again, just like the previous example, the overall trend or sentiment of the market is clearly bullish. What we've done is step number 1, which was to identify the trend line that you're seeing right here. What we're going to do now is simply wait for a break of that trend line. Now, a little tip that I have for you guys is the way that you can identify a setup using this strategy as a high probability setup is simply to wait for displacement, okay? You don't want the market to slightly break through the trend line like it did right here, for example. As you can see, it did technically close above the trend line depending on how you draw it, but it had no displacement, right? There's no massive volume behind it. There's nothing telling you that, yes, this is indeed the break that is going to shift the entire sentiment. So we're going to wait for some displacement to take place because, again, that's going to, there we go. That was massive displacement. And that right there is exactly what we want. Now, what we need to do is wait for the market to create a swing high. And again, this setup stays valid until the end of the trend line has been swept. Because not only are we trading towards the trend line liquidity that we're seeing here, we are simultaneously taking advantage of market maker models. And so for this market maker model to finish, well, then the external liquidity, which again is this high that you're seeing here, has to get swept. So until the external high or the end of that trend line has been swept, this setup stays valid. So drawing out my Fibonacci extension tool here, we want to long it from the 61.8%. So again, entry goes to 61.8% always. Now in a scenario like this, right, we can place our stop at the low and use the high for our take profit, but this right here might not be a risk to reward that a lot of people are comfortable with. So what we can do in a scenario like this is slightly tighten our stop loss so we get a 2.2 or just a 2R system instead. Again, what's important here in terms of your stop loss is that you include the 78.6%. As long as this right here is included, well, then you're following all the rules that you have to follow when it comes to your stop loss. Now again, preferably we want our stop to be at the low, but in certain scenarios, that is just not going to be possible. So again, let's play it out and see exactly what happens. And there you go. As you can see, we got filled to the absolute T. So just like the previous example, just beautiful. It played out exactly how we wanted it to. Now, a lot of people will get discouraged when the market has already swept a lot of this trendline liquidity. But as I said previously, until this high is swept, well, then this setup stays valid. Now, of course, had we gotten the retracement that we were looking for before we had swept all these highs, that would be even better. I'm purely saying that it stays valid until the end of the trend line has been swept. So let's look at a short example here. Again, identify a trend line, and as you can see, the overall order flow here also tends to be sort of bearish. Now, again, we did see a lot of displacement here, which could indicate that the order flow has switched from bearish, which we saw here, into bullish with this massive displacement. But again, as I said in the beginning of this video, you don't need to have a bias in place. So what we're going to do is simply wait for a proper break of the trend line that we have identified right here. And then we're just going to continue the process. So let's wait and see. There we go. We've now had a proper break. And all we're waiting for now is the retracement into the 61.8%. So we're going to place our entry point at the 61.8% as we always have. Our stop goes to the high if possible. Our take profit goes to the low right there. Again, in a scenario like this, I have no problem in placing my stop here because the play is still a 3 risk to reward. Now again, let's say that my entry was somewhere down here. Well, then I could tighten my stop as long as I still have the 78.6% included. But again, this right here is a picture perfect example. So we are going to place our stop at the highs and our take profit goes to the low. So again, all there's left for us to do is play it out and see exactly what happens. All right, so as you can see, not as clean of an example, but it still worked out perfectly. Now, to be realistic here, I probably would have gotten stomped out, break even on this very position, but again, I would have also hit a partial or two. So again, just a perfect example of this system actually playing out, and you can see that this trendline break does indeed indicate when the market is going to reach for that trendline liquidity. So just because trendlines is hated on in the ICT industry doesn't mean that you can't use it to your advantage. Let's look at the last example here, because hopefully you are getting the gist of it by now. So again, we got massive displacement right here, and on this very specific trade, because we have equal highs that you are seeing right here, right? We have a high here and we have a high here. I am going to use that as my take profit, even though this right here is technically the end of the trend line, which I'm looking at. But again, because there is equal highs here, the chances are if this high gets swept, well, then we are also going to sweep this high and this high. So what we're going to do now is wait for a high to get created. We have one right here. So we're going to draw our Fibonacci extension tool from the low all the way up until the high, and then we're going to enter at the 61.8%. So again, I'm going to place my entry at 61.8, my stop goes to the low, and my take profit in this case goes to the external range liquidity high, which again is going to be the one that you're seeing right here. So let's play this out and see if we get filled or not. And as you can see, absolutely perfect. Now, it's also important to understand that the examples I'm giving you in this video is, of course, cherry-picked by me. Just like any other trading system, this can also fail. If not, well, then I would be a billionaire by now. But what I can guarantee you is that this system wins more than it loses. One of the reasons why I like this system so much is because I'm combining two models. Again, I'm using trend lines and I'm using the 61.8% of the optimal trade entry. Now, what we can do is, for example, right here, we also had a massive fair value gap that overlapped with the 61.8%. So again, if you can combine it with an order block, a breaker block, a fair value gap, well, then that's just perfect. It is only going to make the system higher probability. So you can add things as you go along and get more comfortable.